Okay.
and you just tap your trackpad. You just click it over there. You just click it.
Okay. So now I click the share.
Now you share. Yes. Yes, sir. Now your
Okay.
screen is now visible. Now, yes. Now the budget thing has come.
Uh, okay. So
Okay.
thank you. So I hope that you are able to see it.
Yes, I can.
Thanks for this uh, inviting me. It was a pleasure to meet you all. Now we'll discuss some issues regarding 2025 budget. As just now we discussed, you are having a separate program on income tax, and again, I'm not. I would not like to speak much on income tax, more so because I have only basic knowledge about income tax. So I do not want to move into unknown territory. So of course, as far as income tax is concerned, the most attractive and vote-catching announcement was the or is the 12 lakh exemption limit. Now, as a cost accountant, as you know, we are having ABC concept. That is, you forget about C items and concentrate on A items. If you apply this ABC concept, then having exemption of 10 lakh is a very sensible thing, because there is no point in chasing too many people and wasting the resources of income tax department. So it is better to concentrate on big fish. So from that day, it is angle, this 12 lakh exemption is a very good idea. And now, one thing is that has happened. Now, as you know, that they wanted to discourage the old system of giving rebates and exemptions and all that. So now this time I think they are successful. Now that attraction of the old system of rebates and excessive savings and all that, that has practically gone. So now probably most of the people would like to shift to a new regime. Now, before moving to GST, I would like to have just a general effect of this 12 lakh exemption limit. Now, of course, this 12 lakh exemption limit has good and bad aspects. First thing, as you know, now the fiscal deficit will increase because tax revenue is going to come down considerably, because and not only 12 lakh exemption, but the upper slabs also coming down. So the fiscal deficit will surely increase. So that means more. That means government will have to print more money. What is ultimately fiscal deposit? If you print more money and then distribute among people, so the obvious effect of the fiscal deficit is more inflation. That is the direct effect. Now, more money means more consumption. So to that extent, it will increase the consumption. But it has a flip side. See, more money, the money is more, but the quantity of goods is not increasing. So to that extent, so more money is chasing the same quantity of goods. So that means inflation is inevitable. So inflation is side effect of obvious side effect of fiscal deficit. And now they are taken as a fiscal deficit as a part of policy, so we have to live with it. Now, if you now of course middle class is happy that they have got the exemption limit of 12 lakhs, but they do not see the flip side. Now, what is the flip side? First thing, the inflation reduces value of their investment by 10% every year. Now that your whatever deposits you are having, 1 crore, 2 crore, 5 crore, 10 crore, they appear 10 crore, but every year the 10 crore is automatically getting reduced by about 10%. So that 10 crores effectively becomes 5 crores after about 5 years. So effectively, this is an indirect tax without you knowing it. So without you knowing, your investment is coming down by, investment in FD. Investment in shares is of course risky, so that cannot be predicted. But investment, your fixed investment in fixed deposit, postal, etc., surely it is coming down. Similarly, your salary, whatever it may be, X, Y, Z, 50,000, 1 lakh, 2,000. Now that 1 lakh remains the same, but its purchase price goes down by 10%. So effectively, this is indirect taxes of 10% on each and every person. So now, this is not a good sign, because particularly if you rely on interest from investment, and if you are a retired person, you are in big trouble, because whatever investment you have made, it is getting down by 10% every year. So it is simple. If we put it in simple word, it is cheating. At least the old people who like to live on investment, whatever saving are there, they become inadequate after 10 to 20 years, and they come in big trouble. So this is inflation beyond limit is not a good idea. Slight inflation increases the economy, improves the economy, but not to that extent. Now, of course, one of the side effects, that attraction of insurance policy, and because you see, when the basic, when the LIC agent comes to you, he doesn't talk of insurance at all. He talks of income tax benefit, कि आपको इतना income tax benefit मिलेगा, इतना benefit मिलेगा. So people take LIC not for the real purpose, but for saving. Now that is the most silly idea. Because you see, if you take a LIC policy as an investment, your return will be hardly 1%. So taking LIC just for saving income tax is the most silly idea, and hundreds and hundreds of people do it every year. Now, luckily, hopefully, with this, that silly idea will uh, reduce, and LIC will be taken only if they really need an insurance cover, not to save income tax. So, to that extent, I welcome this move. Now, I would like to move into our major issue, that is regarding budget changes. Now, as you know, after the introduction of budget, now there are no surprises in the budget at all. Because you see, when the budget comes, there are surprises. Which rate will increase, which rate will come down, what will be changes in law, etc. Now, all the surprises in the budget are gone as far as GST is concerned. Because unless the issue is cleared by GST Council, it cannot come in budget. So now, to that extent, the attraction of budget as far as GST is concerned is reduced, because there cannot be any surprises in the finance bill. Now, what are the changes expected, that everyone is fully aware. Those who are reading the minutes of GST Council or news, etc., they are fully aware what are the changes expected in this budget. To that extent, that surprise element is gone from the budget as far as GST is concerned. Now, as you know, the first uh, major change or minor change is that Section 261 has been amended, that input tax credit of IGST paid under reverse charge can be availed and distributed. The original definition of Section 261 talked of only in, reverse charge in respect of CGST. That Section 267 was not allowing taking, I mean, whatever you pay IGST under reverse charge, that you could not distribute under input service distributor system. So to that extent, that is a Section 261 is a which was a mistake in that definition. Now that has been corrected. So IGST, whatever you pay under reverse charge, you can also distribute among your divisions and branches. Now Section 20 has also been amended with the same objective. And now one of the major changes in GST is input service distributor system has been made mandatory from 1st April 2025. Earlier, the government circulars were there. The input service distributor was not mandatory. So even if you have got branches or divisions in various uh, states, now you could be, it was not necessary for you to distribute the credit of input tax credit availed at head office. Of course, you could do it, but it was more or less optional. But now from 1st April 2025, now the input service distribution mechanism has been made mandatory. And of course, if you consider the basic principle of GST, that it is a destination-based tax, it is legally correct of that input service, because you see, if some services are consumed in, say, Howrah, then that credit cannot be availed in Mumbai. It has to be availed in Calcutta only. Now, if in absence of ISD mechanism, it was not possible, because suppose you have got head office in Bombay and you take some input tax credit in Bombay, which is partly attributable to various branches. there was not necessary to distribute. To that extent, the states were losing because this revenue, I mean, the input which was actually revenue of say West Bengal, that Bombay was taking. So, as a principle of GST, the ISD distribute system is the logical system. Of course, it is a very, very complicated system and very con- uh, complicated and lot of effort. So particularly those who are having branches division, now they have to be very careful about how to distribute. Now, of course, there are given guidelines on how to distribute this credit. But one of the major issues in this input are distributed is what about the employees? Now, suppose you have got head office in Mumbai and you have got many employees. Now, partly that employee work for, I mean, indirectly, they work for various divisions and branches also all over India. Now, whether that employee cost also has to be distributed to their various branches. So, from costing principle, yes, because that is, those employees practically actually partly work for your branches divisions also. But under GST law, in services provided by employee are neither goods nor services. So, according to my interpretation, your employee costs are not necessary to be distributed through the mechanism of ISD. Of course, ultimately, what will come out, I don't know, but at least that employee costs, so only which are common input services that need to be distributed through the ISD mechanism. Of course, time will tell what will be interpretation and all that. Now, another major change is they want to introduce track and trace mechanism to trace storage and movement of sensible goods from entire supply chain. That is right from receipt of inputs, manufacture, dispatch, reaching the destination and consumption there. So all this chain they want to have track and trace system in them. Of course, not for all types of goods, but only where sensitive goods which are prone to tax evasion. Of course, and when they talk of tax, there are two, three, many items which are prone to tax evasion. One of them is, of course, pan parag and pan masala. Even steel is steel, cement. These are all prone to tax evasion. But it is not so easy to have this track and trace mechanism. If you must have similar provision, they are introduced in export of drug formulations. Because, I mean, particularly where you see, for example, narcotics type of, there are a lot of issues are possible. They have introduced this system in foreign trade policy. For last 2 years, they have not been able to do it. Now, whether they will be able to introduce this system for some products in GST, we'll have to see. But this system is surely going to be very complicated and tricky, and ultimately result will not be known. But they introduce this system. It's not going to be easy at all. And of course, this will not be to all the products, only selected products where there is tax evasion, that is, you clear the goods but they don't export, or you clear the goods and they just vanish in the earth somewhere. So to that sort of goods, they want to introduce this system. Now let us see how it works. Now, regarding there is in the time of supply provision, there is a provision for time of supply in respect of vouchers. Now those provisions have been omitted. Now the provisions of voucher has been there in from 1st July 2017. Now, after 8 years, the government has realized that after a lot of litigation and headaches, now government has realized that vouchers are not goods, they are neither goods nor services. So they have issued a circular that vouchers are neither goods. Now that at least after, better late than never, at least after 8 years, they have realized that vouchers are neither goods nor services. And now so when there are no neither goods nor services, no question of the time of supply, so that provision has been omitted. Valuation provisions should also have been omitted. So at least one headache gone, and one wrong provision has been corrected. Now, there is another provision in section 6. You see, so now, so for example, you supply the goods. Now you give price reduction, and for price reduction, you issue a credit note. Now, if you issue a credit note with GST, charging GST, to that extent, you can reduce your GST liability. But now, so even if suppose you reduce the GST liability, the supplier also has to reverse the input tax credit. Otherwise, there will be double benefit. At present, there was no such mechanism to see whether if you issue credit note with GST, whether the buyer has reversed the Senvat credit. Now, they have amended section 34, and that control system will be through invoice management system. But yeah, according to me, simplest solution is not to issue credit note with GST. Just issue a credit note with financial implication, so no GST implication. That is the most sensible and most simple thing to do. If the buyer is able to get the Senvat credit, then you just issue a credit, financial credit note and let him take the full input tax credit. That is much simpler than this system. But anyway, now this control will be through invoice management system. Of course, the system, as you know, they introduced in October. It is still in testing stages. It is optional, but once it is tested, maybe in by October, they will make it mandatory. So now, so it is a, you can say, beta version of inputs. Uh, Invoice management system is actually functional. Now, this is one of the most uh, important change, and that was expected. Now, as you know, there was a Supreme Court judgment in Safari Retreats case, where it was held that a building can be considered as a plant, and then construction services which are utilized for construction of this building can be eligible for ITC. That is the decision of Safari Retreats. Now, that decision was actually based on a drafting mistake. Now, under Section 17(5)(d) of CGST Act, the word used was plant or machinery. Actually, the term required was plant and machinery. And in the original draft actually contained the word plant and machinery, but somehow at the time of final passing of that IGST Act, they continued to be plant or machinery and not plant and machinery. Now, a very brilliant lawyer tried to take advantage of this drafting lacuna, and they said, now since the word used is plant or machinery, that definition which is plant and machinery which is given in the IGST Act, CGST Act, is not applicable. So a building can be considered as a plant, and then input tax credit of GST paid on construction of a building should be available if it is a plant. Now, it was a clear drafting mistake, clerical mistake. So the intention was never to give input tax credit of construction services. So, but because of the some slight clerical mistake or drafting mistake that had crept in, the brilliant advocate tried to take advantage and say that now building is eligible as construction services for building can be considered as a plant. Now, of course, that was never the intention at all. So it was very much expected that the amendment will be made with retrospective effect. And as expected, that amendment has come with retrospective effect. And they have said that the word plant or machinery should be used as plant and machinery, with the simple correction in drafting mistake that the Supreme Court decision has gone down the drain, and many people who are trying to take advantage of that uh, judgment, they should immediately reverse the input tax credit. Otherwise, there will be more liability of interest on them, and maybe now, of course, once this amendment is there, and then if you continue with the credit, surely penalty will be there. And immediately, if you reverse, at least that penalty will not be there. Interest will be there because the amendment is with retrospective effect. Now, one of the major changes in GST, of course, input service distributor is a major change, but that will affect only companies which are having branches in multi-state. But this invoice management system will have a very broad coverage. In fact, that was this invoice management system which they wanted to introduce was the original thinking from 1st July 2017 itself. But since GST was implemented in hurry, this system they could not introduce. But now, after a lot of trials and errors effort, now they have developed this invoice management system. So now to make it mandatory, now they have amended the section 38 of the GST Act, so that now they can make the invoice management system mandatory. That again, this may be become mandatory by October or November or December, something like that. Of course, because this has to be passed by all states, so it will take time, and the invoice management system will also get settled, and they will make it mandatory from somewhere around October. Now, what is invoice management system? Invoice management system is digital functionality introduced on GSTN portal to accept, reject, keep pending, and reconcile ITC for recipient. At present, invoice-wise reconciliation is very difficult on your return. But now, when the IMS is placed, invoice-wise reconciliation can be done and will have to be done once it is made mandatory. So, whatever minor loopholes were there in input tax credit, that will get abolished when this invoice management system is indicated. The system will indicate where ITC may or may not be available, and an assignee will have to make a specific choice of accepting each invoice. So now, input tax credit mechanism is now getting more and more tighter, more and more tough. And in fact, now it has become these inputs have the most litigation prone area today is this input tax credit, and they have provided so many exceptions, ifs and buts. This is available, this is not available, block credit and all that. See, ultimately, it is much simpler. In fact, government will be after I don't know, after 2, 3, 4 5 years. They will realize that this input tax credit is the most silly idea, and they will have to remove it. Because you see, if at all they want to have input tax credit, it has to be across the board. And if you provide so many exceptions, ifs and buts, कि इसका मिलेगा, इसका नहीं मिलेगा, and all that, if you want to bring too many complications, कि sample पे मिलेगा, इस पे नहीं मिलेगा, the system becomes absolutely complicated and unworkable. But we have to live with the system and try our best to cope up with the law. As you know, our GST, CGST Act is one of the most complicated law in the world. And so that is that distinction we have got to design a law which is most complicated law in the world. And they want to make it more complicated by imposing complications and ifs and buts. You see, ultimately, when they designed the basic concept of GST is that all taxpayers are crooks. That is the basic concept of CGST Act. And all tax collectors are saints and gods. That is the basic concept. And then with this system, if that some loophole may be there, okay, so to plug that loophole, they harass about 95% of the taxpayers. That is how the system works. And again, another system which works in GST is one clarification is equal to two confusion. So the more they clarify, and one simplification leads to two complications. That is how the GST system works. But anyway, we have to work with it. Now, so as I said, this plant or machinery, this is only to get over the slight drafting mistake and nothing more than that. Now, there are some other changes in GST. Now, one changes is there that if the penalty for goods seized under section 129, that is section 129 means if the goods are seized during transit, if there are some mistakes in e-way bill and all that, they can seize the goods. Now, you see, it is very easy to find a mistake in e-way bill or something like that. So, at present, that e-way bill system, if you see the case law, it has practically become a highway robbery, official highway robbery, tremendous harassment of e-way bill. Now, suppose you are in Gujarat and your goods are caught by e-way bill GST party in Assam. You simply have it. You have to forget about the goods. It will be much cheaper to forget about goods than try to recover those expenses. So, and it is very easy to find minor mistakes and harass the assessee. So, but now at least previously the penalty was there Now, of course, the bond and all, so he's anyway trouble. But penalty was there, then previous that appeal could be with 25% pre-deposit. Now, at least one mercy is there that pre-deposit they are reduced to 10%. But there is no solution to that highway robbery that continues. So that is the most easy way of making money for this GST officer. So anyway, but we have to live with the systems. Now, another change is supply of goods within SEZ or free trade zone is neither goods nor service. Now, in fact, this amendment they have introduced, and in fact, it is very clear right from day one that these are neither goods nor services. So there is no issue of input tax credit. There is no question of GST at all. So now, in fact, now they have introduced after 8 years, but again they have forgotten to make it with retrospective effect. So they should have made it with retrospective effect. So if at all were disputes were there, that would have gone. But they don't want to make with retrospective effect, because if they want to make with, they make it with retrospective effect, then assessee who has paid the GST, he will claim refund of the tax paid, foolishly or mistaken. Now they want to avoid that refund. So they say as is. As is means if you have paid the GST, no refund. If you have not paid the GST, forget about it. So that is the definition of as if. Now you see that as if term they have used at least in 10-15 places at various places. So as if means as not as if, as it is. As it is means if you have paid the tax, no refund. If you have not paid the tax, don't pay. That is the simple definition of as such. So, but anyway, we have to. So that is how the law works. Now that is some basic major changes in GST. Other changes is in again Customs Act. Now, of course, the Customs Law Act is more or less settled. Not many major changes, but one of the changes is that provisional assessment should be completed in 2 years and extendable by 1 year by commissioner. And again, as usual, there are so many exceptions that many times they say that this so the 2 year limit has no meaning. And again, there is no provision that if it is not done in 2 years, the assessment will be deemed to be finalized. There is no such provision. Because, for example, after 2 years, it doesn't finalize the provisional assessment. Now, what is the effect? There is no effect. That will continue to be provisional for lifelong unless he passes. So that 2 years provision makes no sense at all. Unless you say if to those 2 years not done, that assessment will be treated as final. There is no such provision at all. So this amendment to that extent doesn't serve the purpose. Now, this is another, but the voluntary revision of entry after clearance. Now, this is a really, if you think of it, if it works properly, it is a good system. Now, for example, you clear the goods. After you clear, you realize that you have paid you have made some short payment. You on your own, you revise the entry, I mean export or import, and then pay the tax, forget about it. So no, except interest, no issue involved. Now, other is also, suppose you have paid by mistake extra tax. You can again file a revision of revised entry and then claim a refund. Of course, getting refund will not be easy at all, but at least that is much simpler than going through a routine refund procedure, which is a very complicated. So if you make a entry, that will be treated as a refund claim, and hopefully you should get the refund. So if it works, this is a good provision. Then next provision in customs law, a settlement commission has been abolished. Now it was practically not working for quite some time, but now from 1st April 2025, that has been given a burial. Now they have formed an interim board of 3 commissioners. Now they whatever pending cases are there, they will settle in 1 or 2 years, and then the issue of settlement, as far as settlement commission is gone. Of course, at the individual level, at assessee level and officer level, that settlement is a daily affair and that goes on. Commission is also a daily affair and that goes on at almost every day. But actually, that settlement commission has gone. But settlement at the lower level, at by various means, that is continuing. Commission at lower level by various means, that is continuing. But settlement commission has gone. Now, as far as import of goods at concessional rate, they have made some slight procedural changes. Earlier, monthly report was required. Now they have made it quarterly. So ease of doing business. And then you were required to fulfill the conditions within 6 months. Now they are increased to 1 year. So it is more or less sort of a ease of doing business. So to that extent, it is a welcome change. So these are the major changes in GST and customs. So I just wanted to give highlights. So now if you thank you for listening to me carefully. Thank you.
Thanks a lot, CMA
Okay.
Radhe. So it is really pleasant for us that you are just 80-year young chap amongst with us, and you are full of energy, full of enthusiasm, and you have made a lot of efforts to make those PPT in a just crisp manner, and you have presented in that way. And so I would like to have a very quick Q&A session from our members. If you have any question, we'll take a couple of questions from anyone. Please raise your hand so that I can go to them and take the question for sir. Acha, Mr. Sharkar, Gautam Sharkar. Yes, please let me know your question, Mr. Sharkar.
Will this time petrol, diesel means petroleum products will come under GST?
No, I think I don't think any immediate chances or immediate proposal to bring it. So I don't
Okay,
think
thank you. Thank you, sir.
Okay.
I don't think there is some immediate provision like that.
Okay. Now CMA Anand Pandey is there. CMA Pandey, please raise your question.
Hello.
Sir,
Yes.
sir, Kati sir, am I audible, sir?
Yes.
Sir, you have discussed about Safari Retreat judgment. Is it going to have a retrospective effect?
Yes, yes. They have made it with retrospective. 1st July 2017.
Okay, sir.
That was highly expected.
Okay. Thank you. Which was hunting our mind that what will be the implication of Safari Retreat judgment. You
No,
have
it was-
nicely clarified this thing, sir. Thank you, sir.
Thank
Okay. Mr. Sharkar, CMS, Gautam Sharkar requested to drop your hand, please. Yeah.
No, I have one more question.
So I'll come back to you. Let me have any other question. I'll come back to Mr. Sharkar. Let me have one round with other question. If they don't have, I'll definitely take your question. Anybody else? For Date, sir? Oh, Taraji, you have a question? Our all favorite, Mr. Tara Shankar, CMA Tara Shankar Devashish. Yes, please raise your question, sir. Yes, Taraji, you can raise your question.
Yeah. Sir, my question to you, does the government want to reintroduce GST audit by cost accountant under section 35, subsection 5?
you. Wishful thinking. No chance.
Okay.
Okay, sir. Thank you.
CMA Muralidhar Panda.
Yeah. So there is omission of the word auto-generated in the statement of input tax credit.
Huh.
And there is inclusion of including, word including. So what's the effect of that, sir?
No, effect is that you see now that original idea was that system itself will decide whether you are eligible for that is the original thinking when the law was designed. The system itself will decide you are eligible or not eligible. No, that is something not possible. So that is why they removed the word auto-generated. So that means because now under invoice management system, the assessee has to decide ki whether I am eligible are not eligible. That is why they have removed that word auto there. So system will only generate the all the invoices on your record. It will indicate कि it may be eligible or it may not be eligible. But ultimately decision will have you will have to take whether I am eligible or not eligible. So earlier
Okay.
the system, I mean original idea was that system itself will decide. Now that was not workable. So now they have dropped that.
Okay, sir. Thank you, sir.
Okay, kindly drop your hand. Okay, thank you. I've done it. Thanks a lot. And anybody else? I'll take just one or two questions. I'll take quickly come back to Mr. Gautam Sarkar. Please raise your question. Please place your question, your second question. Yeah. Please place your question, CMA Sarkar.
Will there be any reduction in GST rates of the means on consumables, means the revenue items that public consumes on regular basis, like food items, like groceries, like vegetables, like
Yes, for example, vegetables are already exempted, fully exempted. Food items, most of them is 5%. The only luxury items, the GST rates are 18. Luxury food items, 18. So the luxury items, if you are
packaged,
paying that
all
much,
the
then why not pay 18%?
packaged items have 18% GSTs.
Huh?
Can't that be reduced? All the packaged food items
Huh.
um, uh, carries 18% GST, isn't?
Yes. So you see, why packaged food is because you see you are willing to pay for the brand name. No? Same item, if you take it on the street, it will cost 5 rupees. If you take it a packaged item, you are willing to pay 20 rupees. So why not government have its own share? You see, ultimately, when you are packaged food, as you know, packaged items are normal, much costlier than the original item, and you are willing to pay for that brand. And so, if you are willing to pay for that brand name, you pay GST also. What is the harm?
No, but why so high GST when the non-packaged item has so low GST?
You see,
So why?
non-packaged, you see, because non-packaged items are sold at kirana level, at
Yes.
grassroots level. So where the purchasing power is less. When packaged items, the purchasing power is high. When your purchasing power is high, when you are willing to pay more, then why government should not take a share? You see, government wants to encourage people at grassroots level. If now, for example, rich person who
Not
wants,
not the middle class. We are the middle class. We are not
so
the
middle
rich
class
person.
also.
CMA Sarkar, actually, time is very short. We are not in the mode
Anyway,
of discussion. This is a
that
good
is the
point you have
policy.
raised. This is a good
Anyway,
point
that
you have
is a
raised.
policy decision.
It is
So
actually
at least
policy
it should
matter.
be reduced. At least it should be reduced to 12%. I think
So
it
this
should
is
not
what
be.
CMA
That
Sarkar,
should,
Let the
CMA
institute
Sarkar, this
make
is our. So, sir, if we can confine to our discussion to the finance bill, what does it contain? What could have been done? That can be discussed with separate forum. Actually, anyway, CMA Dati is kind enough to answer those questions. So I am taking the last question. This is one important question has come through chat. One Vigneshwaran has raised this question. CMA Vigneshwaran. Sir, I'm reading out it. Dati sir, I'm reading out the question for you in the
Yes.
chat. It has come.
Okay.
It has written regarding claiming refund of ITC on supply to SEZ without payment of taxes. Can ITC on capital goods be claimed?
No, refund you cannot claim. There is no provision for claiming refund of capital goods on input as credit. That's why you take the credit, but you can utilize it elsewhere. But if you are not able to utilize it elsewhere, that credit is gone.
sir,
So ITC on capital goods cannot be claimed as refund, right? You can take the other ITC can be as refund or something like that, right? Capital.
Inputs where you can establish one-to-one relationship, that credit you can take. But it's a clumsy procedure.
DS দাতে আমাদের স্যার ছিল
Mr.
one
Sarkar,
one
can you
more
mute
question.
your microphone, please? CMA
Yes,
Sarkar,
no,
can
no,
you?
I have a question, sir.
Now I
If
cannot take any more questions, Mr. Sarkar. Please, please, we have to. Other speakers are there
No, no,
because
this
we're
is a
already running short
very
of time.
basic question for PSU. If there is a inverted tax structure, means we have more input tax credit than what we are to pay, our tax liability, can the excess amount of input tax credit be refunded back to the entity, to the
Yes,
PSU?
that provision is there, the inverse, but it's
No.
each item has to study. Often, it is, principally, inverted duty structure refund is available. Of
No,
input
sir.
tax.
No, we are not getting refund.
No, that,
Then we will have a huge refund of ITC. I am in the coal sector, sir. I am in the coal India. So we have a inverted tax structure. We pay 5% GST on our output, and we pay 18% GST on our input.
you see,
So we
I
are
know often I cannot say, but many products they have removed it from the list of products where inverted duty structure refund is available. So if
no,
the
sir. We are
employees,
not getting any refund. We are
then,
not getting any refund
then you see you are not getting refund. There has to be good reason, na?
because there is no provision. They are telling there is no provision in the GST Act for refund.
Then you,
Refund in cash to the entity. Means
you,
it will be
uh,
carried over indefinitely. It will be carried over.
but anyway, I mean, often I cannot say. You send me mail, I will
So
see
this
what.
is a basic. Okay, sir. I will send you. I will send you, sir. Okay.
Okay.
Thank you.
Okay, thank you, thank you, thank you. So, thanks a lot to Dati sir.
Thank
Thanks a
you.
lot to Dati sir, and we are very much thankful to you. All of the members and all the participants of the sessions are heartily congratulate you for having with us, for spending so much of time with us. Thanks a lot, sir. Thanks a lot, sir.
Thank you. Thank you.
Now we will invite.
Thank you, sir. Thank you very much.
Thank you.
Okay, so lot of messages are coming from you, lot of emojis are coming on the screen, and so many things are coming. So thanks a lot. Thanks a
Thank
lot, sir.
you.
Okay, okay. Now, sir, you can switch off your camera, sir. You can take off your presentation and just stop presentation. If you can do it, sir, it will stop presentation. Stop sharing. There is on the top of the bottom, top of your screen.
Okay.
On the bottom of
Yes.
the screen. Now you
Yes.
can switch off your camera, and we will be happy if you are there in the remaining part of the session, so
Yes,
that.
yes, yes, yes. Yes, yes, I am there. No problem.
Okay,
I'm
thanks a lot. Thanks a lot once again, sir. Okay, thank you. Thanks a lot. So now I would like to take a note from Satyaji whether CMA Rakesh Sinha is available. Our next speaker. Yeah, Rakesh is available, I believe.
He has a lot of concerns.
Hello, your voice is not clear, Satyaji.
It's in the chat box.
No, your voice is not coming. Satyaji, I cannot hear you.
I will in the chat box.
Yeah, please. Rakesh ji, are you there? Are you available?
Yeah, good evening to all of you.
Okay, thanks a lot. So
Good evening,
over to
sir.
you.
Yes, yes, I am here. That I am here. I am just listening now.
Okay.
Uh,
So
uh,
let me introduce just very quickly to CMA Rakesh Sinha. He is a seasoned cost and management accountant and a very fighting kind of person, having lot of write-ups. Is doing exceedingly well for the profession as well as for his professional career also. But mostly he's very much available, very much, and he's a person who knows the cost accounting, cost audit, and a very good amount of the taxation. But today we would like to hear from him about the direct tax portion of the Finance Bill 2025, because we have most for the last few from the day one, from 1st of February, we have been listening to about that 12 lakh thing. So as if that budget is all about the 12 lakh, though it is the estimate of the people, estimate of the finance ministry itself, that it will actually benefit 1 crore of Indian who will not pay tax, right? So we would like to hear from CMA Sinha, what is the other aspects of the direct tax as well as all, because the 12 lakh things, if he wants to add more about it, that will be great for us. And I would ask you to other members also, when you will be raising the question, please confine to the finance bill only what is there and what could have been there, because that time is not there. Already we are running short of time. And I would request Mr. Sinha also to make your presentation in that way. That's all. I have taken much of time actually. I have taken your time. Over to Mr. CMA Rakesh Sinha.
Thank you, Sandeep sir. And first of all, I would like to recall Date sir. When first time during the UPA government, GST concept was came, I think Date sir is remember in 2009, we had organized a program on GST in Bokaro Steel City and invited Date sir, and it is our privilege to heard him before must implementation in 2009. I hope Date sir recall.
Yes,
that.
yes, I remember. I remember.
Thank you, sir, for remembering me. And
Okay.
today it's very important time for me to sharing again dice with you in virtual mode. So thanks to God. And I will just share my slide. My camera is not working due to some technical problem in my laptop. So let me just start to share my slide. Give me 1 minute, please. So is it visible?
Yes, sir. It is visible.
Okay. Sandeep sir, can you help assist me how to uh, scroll the slides in on screen?
How to scroll the slides? You can just you can click every slides and it will go that way. Or if you go down, then there is a side. You can see there is a
Okay,
side
okay.
explorer also there.
Okay.
There is a slider. There is This way.
Or
You just
right now,
you just
it's
drag it
not
down. You
visible, no?
just drag it down.
Okay, okay.
You just click the cursor, press on and drag it down. It will go down in that way. Or you can just click one after one slide, it will go. You take the cursor on the slide and click it.
Okay.
Yes, you click it, it will go. And that way. That is the way. Or you can do simply you put F5, then entire screen will be available on the sky. Then simply you click, the slide will be automatically changed. There is a button called F5, functional key F5 on the top of your laptop, where the entire screen will be available for presentation. Hello. Hello. Rakesh ji, are you there?
Yeah, just not. Actually,
Yeah,
there is
yeah.
problem.
No, no, you are doing well. No problem. You just click the slide and just click every slide. It will come down automatically. Yes. You just take the cursor and go. Third.
So now it is visible. Okay.
Click the slides one by one. In the left side, it is it is seen every slide. You click on the slide, it will come on the front on the.
You take the cursor on the slide and click it. It will go.
Okay. So now let us start.
Yeah,
Yes.
please.
Uh, my presentation will be based on two parts. First part, in first part, I will discuss, as we know, all CMF fraternities heart is, means we are very much excited to know about what will the result come within 1 and 2 days, right? So I had just go through the speech of the finance minister, Mrs. Nirmala Sitharaman, and pick out some key sentences and words and try to understand the vision of the government. And from that uh, vision and keynotes, I am sure 100% that in coming new income tax act, the CMF fraternity is going a positive result, and our scope as a practicing member will enhance. And in second part, I will discuss some major amendments made in this proposed in this budget. So that will be my presentation in two parts. So let us start with my first part. What is the vision? If the vision of the government is very much clear, they wanted to accelerate the growth to become a third largest economy in the world, and wanted to development of all, sabka vikas, inclusive all development, and to motivate and attract from more investment from the private sectors, uphold the local for local products make in India, and enhance the purchase power of the middle class. Uh, we can see, we have seen in last 4 to 5 years, 5 months, there was a report of survey of FMCG goods. The consumption of FMCG goods is down due to inflation in price and due to other factors. So government is very much aware at that time, and I think that motivate the government to enhance the purchase power of the middle class. And also the second factor is there was a huge cry among the common publics. As you know, all the political parties are offering freebies because it is started by some one party, if other parties are also impelled to go on that part. But in long term, this is not good for the country and not for us. As we are a professional, we understand that things, but in large common people are not understanding that thing. They're keeping vote on the basis of freebies. So anyhow, for middle class, there is no freebies except Ayushman Bharat such a scheme. But now in this budget, government has made a vision to make a plan for next 5 years, Sabka Vikas, to balancing the growth of all regions. And for this journey of 5 years, they have first, we can say, take a fuel as our reforms. The government is planning to make major reforms in each and every law during the coming 5 years. And spirit is inclusivity. सबको साथ में लेकर के चलना है. And aim is by 2047 विकसित भारत बनाना है. ये सरकार का एक विजन है. In this budget, the government has started the transformative reforms, and they have decided 6 domains: taxation, power sector, urban development, mining, financial sectors, and regulatory reforms. So in these 6 domains, government had planned and they have made a roadway how to proceed. And regulatory reforms, the basic mantra is ease of doing business. And government is planning to use more technology innovatives and like AI, etc. Update the regulations to make it more effective and very productive of the laws, make it 21st century's laws by developing modern and make it more people friendly, and it will cover all the people of the India. So this is the vision of the government. And for making the regulatory terms, the government is going to form a high-level committee for regulatory reforms. And second step is investment friendless index of states. अब तक क्या होता था, जिसकी सरकार है, जिसने जहां पे मेरा सरकार है, मैं उस स्टेट को ज्यादा ध्यान दूंगा, और जहां पे मेरा सरकार है उसको ज्यादा ध्यान नहीं दूंगा. These are the basic we have seen during last 6 and 7 decades. Now this time government is going to make a indexation wise for all in each every state and take it as a competition platform, and based on their performance of the states, government, central government will make plan and make funding for the development of country, so that all states come together to make a true of dream to become a Viksit Bharat up to 2047 during the Amrit Kal journey. FSDC mechanism they are going to adopt. Under this mechanism, they will review time to time the impact of the financial regulations and time to timely formulate and update that instructions to make it more effective. In Jan Vishwas Bill 2002.0, now government is going to Jan Vishwas Bill. In 2023, under this way, the government had already omitted or deleted 180 legal provisions under the various laws. Now government in Jan Vishwas Bill 2.0 is planning to decriminalize more than 100 provisions in various laws. So that will be vision for the government to make it more fruitful to all of us. Now, direct tax reforms. During the 10 years of this government, NDA government, they have taken many major steps to reform the taxation, especially in direct tax, faceless assessment, taxpayer charters, faster returns, and self-assessment Vishwas scheme. So these are some major steps government has already taken and is continuing to make more reforms. So this time the finance minister started the reform of direct tax. Trust first, scrutinize later. So government vision is, मैं आप पे trust करता हूँ. It is going to give a chance to the SSC to file their income tax return honestly, and if government found any loopholes, any malpractices, then government is not going to left those SSCs. So these are the basic mantra, and within couple of days the new income tax will be going to introduce in the parliament, and thereafter it will be available in the public domain. And in her speech, he spoke about the Bharatiya Nyaya Sanhita, Bharatiya Dand Sanhita, and third one is Evidence Act. They said, I am happy to inform this August House and the country that the new income tax bill will carry forward with the same spirit of Nyaya. So this word Nyaya is a more haunting to me, and based on these sentences, the visions of the steps and speech of the finance minister, I am 110% confident that in the new Income Tax Act, the fate of entire CMA fraternity is going to change. So it is my request to have a very positive wave and just wait for 1 and 2 days. So this is the first part. Now the second part is the reform. The reforms have measure some points. Personal income tax reforms with special focus on middle classes, which we have already heard from last few days. 12 lakhs exemption, rationalization of TDS and CCS for easing difficulties, encouraging voluntary compliance, reducing compliance burden, ease of doing business, and employment and investment. So now, my friends, I request to all the practicing members to must be familiar with the TDS and TCS provision. In coming act, it is going to be a very, very important part of our practicing life. So we must be prepared before coming in the existence of that new coming act. So we should be prepared for TDS and TCS provisions. Another reforms is that in this budget, government has proposed to change the definition of MSME. So here is a table, we can understand that at present, micro means having investment up to 1 crore or turnover 5 crore. This is increase in case of investment 1 crore to 2.5 crore and in turnover case 5 crore to 10 crore. Similarly, for small enterprises, it is increased from 50 crore to 100 crore for turnover criteria and 10 crore to 25 crore for investment purpose. And medium enterprises from 50 crore to 125 crore for investment and for turnover 250 crore to 500 crore. So now the range of the micro, small and medium enterprises will be based on the turnover. Up to 10 crore, the enterprises will be called micro. 10 to 100, it will be small, and 100 to 500, it will be medium. So, and many other steps has been taken by for MSMEs, like government is going to issue 10 lakhs credit cards up to 5 lakhs to each micro enterprises and many other steps. I think by defining this turnover criteria at present under section 44AB, if any SSE had business transactions within 5% of inflow and outflow in cash, in that case, tax audit is not mandatory up to 10 crore rupees turnover. So, it my guess, maybe it will be more clear after coming of the new act. Maybe government can either make not mandatory to tax audit up to 10 crore, or government will remove that policy like GST. There will be only a special audit in coming new income tax acts. So that is the two guess so far tax audit is concerned. It's my opinion. Now, first government has tried to give in hand more money, and on that aim, first is to exemption up to 12 lakhs, and second is to enhance threshold limit under various section of TDS and CCS. And so I have put it here. Under this section, the threshold limit has been slightly increased. In 93 interest on securities, it is at present there is no threshold limit, and in some cases it is up to 5,000. Now it is enhanced to 10,000. So if the interest on securities is given by the company to the debenture holders, then it up to 10,000 there will be no TDS under section 193. Similarly, 194A for interest on investment and others for non-senior citizen people, means below the 60 years age, the threshold limit will increase going to increase from 40 to 50,000 rupees. And in case of senior citizen, it is enhanced from 50,000 to 1 lakh rupees. So this is very sound, good for the senior citizens. They will get more interest in their hand. Now, under section 194B, winning from lottery or crossword, 10,000 exceeded in a single transaction. Earlier it was aggregate during the financial year. Now government has made it, if a single transaction 10,000 exceeds, there will be a taxable of TDS one under section 194B. Similarly, in case of winning from horse race, 10,000 exceeded in a single transaction, replace the aggregate during the financial year. In 194D, in commission on insurance, it is threshold limit increased from 15 to 20,000. Under 194G, commission on sale of lottery ticket, it is increased from 15 to 20,000. Under 194H, commission of brokerage, it is increased from 15 to 20,000. 194I rent. I think this is a very important and very highlighted threshold limit, which is going to benefit for the SSC who have a rental income from their buildings or plant and machinery. At present, up to 2,40,000 rupees, there was no required deduction under section 194I. So now it is enhanced from 2.40 lakhs to 6 lakhs. So up to 6 lakhs income or 50,000 rent income per month, no deduction of TDS under section 195(4)(I). I think this is a more benefit to the middle class family. Next, 194J, fee for professional or technical services. Here again, threshold limit is enhanced from 30,000 to 50,000 rupees. In 194K, income in respect of unit, 5,000 to 10,000, it is increased. Similarly, under section 194 LA, payment of compensation on acquisition of certain immovable properties, it is enhanced, just make it double from 2.5 to 5 lakhs. This will help the people. Right now, we seeing that government is more focusing on the development for infrastructures, whether it is in railway track, whether it is in the road. So, and for making more roads, highways, and fast highways, government is taking land from the villagers. So now this provision will help that villagers to no deduction up to 5 lakhs, and they will get more cash in their hand at the time of making the compensation payment. Under section 26AB, this section in the present budget is going to be omitted, and I think this is a very good example for ease of doing. Basically, this section is very complicated for the payer who is required to deduct tax at the time at any payment. They have to check before making payment whether to whom we are going to make a payment has filed his income tax return within due date or not. So, it is very difficult for the company to make a compliance under this section. So now in this budget, government has omitted this section. Only at the higher rate TDS will be deducted where PAN is not available. Right? Now on the TCS provision, under section subclause 3 and 4, TCS on the timber and other forest products, they have reduced the TCS rate from 2.5 to 2%. In the case of remittance under section 2061G, under the liberalized remittance system of RBI, they had enhanced the threshold limit from 7 to 10 lakhs. And another very good step government has taken by abolish the section 2061H, TCS by the seller. Till date, there are two sections. One is 194Q, that is TDS on purchase, and another is TCS on the seller. and conditions of both are same. From one hand under 194Q, purchaser has to deduct tax, and in this section, seller has to deduct tax. So in it, at some point there is a contradiction, and there was a confusion. Who will first deduct? We have seen that in many cases both have deducted the tax. Seller has also collected TCS, and purchaser also deducted tax. So this is a good initiative by the government to abolish the seller. Now TDS on purchase will be only under 194Q. Another major step to voluntary contribution and government is trusting on SSC is to update to allow the filing of update return under section 139A to enhance the just double from 24 months to 48 months. So now any SSC can update their returns from within 4 years from the end of the relevant assessment year, subject to conditions under that section. Means if we had a refund, then we cannot file this return under the section 139A, that is update return. So to claim a refund, you have to find within the due date or at least belated return or at least up to cut-off date return. But in any other case, we can update our return up to 48 months from the end of the relevant assessment. I think this is a very good step by the government. Second major step is for small charitable institutions which have a 12 exemption or section 12AB or 12A. The government is now at present, when a charitable institution apply for registration under section 12A to have a benefit for tax exemption, the commissioner, after satisfying all the documents, they provide 5 years exemption range. Now, government has raises in this budget purchase to enhance from 5 years to 10 years. So this will also going to benefit the charitable institutions and trust. And government has reflected, सरकार ने ये नहीं बोला, मैं केवल बोल रही हूँ, हम बोल रहे हैं कि हम आप पे विश्वास करते हैं. They are trying to give a message by making proposed amendment in certain sections. Yes, we are definitely, we have on trust on our people, and we expect as a government honest return from the people side. And another, this is a major amendment proposed. As you know, at present, if we have a house property more than one, more than two, then in only one house property, the annual value will be nil. Right now, government has changed this and added more one house. Means if any SSC have more than two house, then in that case, up to two house, their annual value will be nil. Provided subject to that conditions, if they give that building in rent, in that case, they will fall under the taxable, under the income from house property. If they have not given in on rent, then the value of two house will be nil. And also that provision of subsection 2 of section 23 will be substituted by this. The annual value of the property consisting of a house or any part thereof shall be taken as nil if the owner occupies it for his own residence or cannot actually occupy it due to any other reason. Or at present, there was a provision due to any reason, means due to employment or due to business or profession. So this is going to replace by the above due to any other reasons. So the SSL value of two houses shall be nil. Now, at this time, this is a very hot cake. Up to 12 lakhs, there will be no income tax. And before going to that, there is another proposed amendments in transfer pricing case. You see, under 192 CA, if assessing officer find there is a doubt in arm's length pricing, then assessing officer may refer it for transfer pricing valuation to the transfer pricing officer, and for 1 year only. Now the government has proposed to make it 3 years block period, means 1 year and just preceding 2 years also, if assessing officer want, with the prior approval of the commissioner or chief commissioner, they can refer to the transfer pricing officer for calculation of arm's length price in the international transactions case. Now, from assessment at 26-27 up to 12 lakhs, there will be no tax. And this is due to because of rebate under section 187A. So these are the tables which is effective from 26-37. So up to 4 lakhs, there will be no tax. 4 to 8 lakhs, 5% above 4 lakhs. And these are the rates. First time government introduced a rate of 25% and new range of income is 20 to 24 lakhs. I have calculated the benefit. The benefit of this section under new tax regime is range between 5,000 to 1.2 lakh savings in the hand of the middle class. Suppose I have take an example. If anybody have income up to 8 lakhs, then up to 8 lakhs in present rate, they have to give 35,000 tax. 35,000 without education higher cess. But in proposed tax rate, the tax up to 8 lakhs will be 20,000. So there is a benefit of saving of 15,000 rupees. Similarly, if income is up to 12 lakhs, at present tax will be 20,000, but in proposed tax rate, it will be 60,000. So there is a saving of 30,000 rupees.
Sir, may I raise a question? But you said ki up to 12 lakh there is up to 12 lakh there is no tax, means nil
Yes.
tax.
Yes.
Then how this up to income of 8 lakh the proposed rate is 20,000? How it comes?
You see this table.
Actually, Rakesh ji, actually, I'm just sorry to Mr. Sarkar also, this question is very relevant. Sir, I will answer at the end of the session.
Okay.
Yes.
Park your question. Rakesh ji, I would like to request you to conclude it because we are already taken.
This is my last slide.
So I understood here the
Yes.
participants can understand that you have calculated overall savings how much.
Yes.
So you have calculated a good range. So up to 1.2 lakh, there can be saving.
Yes.
Right, maximum saving. So
Yes.
I would request you to kindly conclude with your concluding statement, and so that I'll park the question at the end of the session. Then please wait for a while. For that.
Okay. Okay. So that is my last slide, and I am going to in this my session with hope and best wishes to all the CMA fraternity, and I am 110% confident by hook or crook. This time we are under audit definition in the Income Tax Act. So thank you very much, and I will take questions if there is.
Okay. Sinaji, Rakesh ji, question will be parked at the end of the session, not for this session. Another speaker, our next speaker is waiting. Another CMA is waiting for us, and so thanks a lot on behalf of AICMA. So this is the forum to invite our participants as well as the speakers like you to deliberate on the Finance Bill 2025. So we are thankful to you. Now I would request CMA PV Iyer to present his deliberation. I know that he's getting very short amount of time. I would request you only the crisp part which he thinks the most important part can be shared with us. Please, Mr. Iyer, over to you. CMA PV Iyer, please.
Ayerji, please unmute yourself.
Sir, voice is audible.
Yes.
You
Hello?
are audible. You are audible.
Okay, thank you.
You are audible. Please.
Okay, first of all, I will like to convey my thanks to the AICMM office bearers for giving me this opportunity. So I will be presenting my presentation on the direct tax proposal, which is in the Finance Bill 2025. So first, regarding the personal taxation, as everybody, it is much discussed topic nowadays. So as far as the old regime is concerned, there is no change in the tax rate. Similarly, no changes are proposed in the surcharge and education cess also. So as far as the new tax regime is concerned, it is already discussed by the Rakesh sir. The new tax structure is already discussed. Only one thing is there that resident individuals will be now eligible to claim rebate under section 87A up to rupees 60,000. And one important clarification which has been given is that no rebate will be available if the income contains any special income taxable at any special rates. Like it is income from capital gains or lotteries, then they will not be eligible to get the rebate under section 87A, which was in the recent past, it was actually a little bit debatable also, and now they have clarified this point. So now many people were panicking that if their income increases slightly by margin of 12 lakhs, so they will have to pay the very high tax, but for that they can claim a marginal relief, which will be applicable up to 12 lakh 75,000. Now the next slide is of the tax slab only, which is already discussed. So I'm skipping that. Now one important amendment which is proposed in the finance bill is regarding the perquisites. As everybody knows, in section 17 subsection 2, it discusses about the perquisites. At present, an employee whose salary, annual salary is up to 50,000 will be coming under this perquisites. So any perquisites provided by the employer will be taxable in the hands of the employee. And similarly, if employee is bearing any travel expenditure for medical treatment abroad to employee or family members, so in that case, that will be treated as a perquisite if the gross total income of the employee exceeds 2 lakhs. But the proposal is made that considering the standard of living and economic conditions, so government has asked the CBDT to prescribe the revised limits for perquisite. So I think this limits they may revise. And but one condition is that this will not applicable to the directors and employee having substantial interests. So another important amendment which is proposed is an income from house property, which is already discussed earlier. If it was not occupied owing to the reason of employment or business, then only that exemption was applied. But now they have amended that if it cannot be occupied for any reason, then the annual value of 2 house property will be nil. So another update in updated return, the proposed amendment is there. So this is the table. So it can be filed up to 48 months now from the end of the relevant assessment year, but additional tax payable will be up to 75% of the aggregate additional tax and interest. So now in old regime, they have made an amendment that if any contribution is made to the NPS Vatsalya scheme by the parents or the guardians in the name of their minor children, so they will be allowed exemption under 80 CCD 1B, that is up to 50,000. But this will apply only if they are opting for the old regime. But I think now old regime will not that much be valid considering the exemption given in the new tax regime. And if a partial withdrawal up to 25% of the contribution will be exempt, and when it is finally withdrawn, that entire amount will be taxable. So another important amendment they have made is exemption given to the startups under section 80 IAC. So earlier it was the starting date was before 1/4/2025, but now they have increased it to additional 5 years. Now it can be taken up to 1/4/2030. That is 100% of the profit of the 3 years out of the 10 years. Now, this is a very new addition they have made with respect to the presumptive tax scheme for non-resident. That is, they have introduced a new section 44 BBD, which would apply only to the non-resident providing services or technology to a resident company in India to set up electronics manufacturing facility or manufacture or produce electronic goods. So the rate will be up 25% of the total income paid or payable to the non-resident for providing such technical services. So this is a new section which will be introduced, 44 BBD. So proposals for charitable and religious trusts are also there, as discussed that 5 years will be now increased to 10 years in case of a trust whose income before exemption does not exceed 5 crores in the 2 previous year immediately preceding the application. But this will apply only to the trust or institution which is already commenced their activities, but not to the new trust which is seeking registration for the first time. So another important amendment they have made, that they have removed this specified violation term from the section 12A B. That is, if the incomplete application is there, then the trust will not be, it will not be treated as a specified violation. So because of minor defaults, that trust now it will not be considered as a specified violation. And another important clarification is given in for section 13 subsection 3, that is a relaxation of specified person. At present, anybody who contributes 50,000 also, they will be treated as a specified person and the disallowance will attract to the trust. But now they have increased it to contribution up to 1 lakh per year, or aggregate contribution exceeds 10 lakhs, then only that person will be treated as a specified person to attract the disallowance under section 13 subsection 3 of the trust. And another important change is made, that the relatives of the substantial contributors will not now fall under the specified person's definition, and also the concern in which they are having a substantial interest will also now not be treated as a specified person. So this is a very important change which was made with respect to the charitable trusts. So TDS, TCS has been detailedly discussed by Rakesh sir, so I am skipping that part. Only one point I would like to add, that if any remittance is made for education purpose out of an educational loan, then that they have not taken it from out of the TCS liability. So these are the rates. Now another important change is made with respect to the ULIPs. Earlier, now all ULIPs which are not eligible for exemption under section 10 subsection D will fall under capital assets. Earlier there was a little confusion that only those ULIPs which are not exempt because of 4th and 5th proviso of section 10 subsection D, only they were treated as a capital goods, but now they have removed this provision, and now all ULIPs which will not fall under 10D will be now classified as a capital asset and will be liable to the capital gain taxation. And likewise, all ULIPs will be now considered as an equity-oriented fund. So next amendment is regarding the business trust. So everybody will be aware that business trust, like in real estate investment trust and infrastructure investment trust, their income is granted pass-through status. Interest income, dividend income received by them is given a pass-through status, and for remaining income, business trust is taxed at a maximum marginal rate. But earlier it was subject to 111A and 112, but now in proposed amendment, it is proposed to include section 112A also. So as a result of this amendment, long-term capital gain from securities will also be now taxed at a 12.5% only. Remaining income will be taxed at maximum marginal rates. Another interesting amendment is tonnage taxation scheme, which was now applicable to the qualifying sea-going ships. Now they have extended it to the inland vessels also, which is registered under the Inland Vessels Act. So impact of this amendment will be to encourage the inland water transportation in the country. So this is the procedure, how to apply for the tonnage taxation scheme. In that they have made a joint commissioner can now pass order within 3 months from the end of the quarter in which the application is made. So this time limit they have increased from present 1 month from the end of the month. They have now increased it to 3 months from the end of the quarter. So this limit will apply from 1st April 2025. In crypto assets, there is a new section introduced that every that is reporting entity crypto exchanges will now be required to furnish information regarding the transactions in crypto assets. So the applicable from assessment year 26-27. Now regarding taxation of non-residents part, some amendments has been made, like one clarificatory amendment is given, like export of goods will now not be treated as a significant economic presence. This is just a clarificatory amendment to align it with the explanation 1 of the section 9 bracket 1 subsection clause 1. Sovereign wealth funds and pension funds, they may make investment in the infrastructure entities in India. So for them, exemption under 1023 FE has been extended till 31st March 2030. And similarly, long-term capital gains from the investments made by these sovereign wealth fund, pension funds, and Abu Dhabi Investment Authority in Indian infrastructure entities will now be exempt, even though they are deemed as a short-term capital gain. So this is another update which is made in the finance bill. So transfer pricing, as already discussed, now transfer pricing analysis will be carried out in a block of 3 years. So that will be the financial year in the question, that will be the first year. So same will apply to the consequent 2 years assessment years also. So this is just a procedure how to apply for the transfer pricing block assessment. Another important change with regard to the carry forward of losses and amalgamation. This is a very important amendment. At present, what happens is that if any amalgamation takes place, then loss can be carried forward for 8 years from the date of amalgamation. But now they have amended it that loss will be carried forward for 8 years when it was first computed by the predecessor entity only. So now, as a result of this amendment, multiple carry forward of loss will be avoided, because indefinite carry forward of loss, there was a loophole that if multiple amalgamations takes place, then loss can be carried forward for indefinite years. Now that 8 years from amalgamation has been changed to 8 years from the when the loss was first computed by the predecessor entity. Some amendments has been there in the IFSC. This is just selected amendments I have taken. That sunset clause for the IFSC units has been increased till 31st March 2030. And the insurance premium condition of that 2,50,000 aggregate premium and 5 lakh, 2,50,000 for ULIPs and 5 lakhs for the other insurance policy will not apply to any insurance intermediary office located in IFSC. So they will be exempted on all insurance policies premiums. And the deemed dividend criteria will not apply to this any borrowings made by corporate treasury center in IFSC from its group entities. So other amendments, one important clarification they have given regarding the stay, which says that now stay will be computed from the day of stay till the stay vacating order is received by the authority. Earlier, it was in many sections, it was written that period of stay would be excluded, but now they have given clarity that from the date of stay till the date of vacating stay is received by the principal commissioner or commissioner, till that time that period will be excluded for computing the various limits. And one small amendment is there in National Savings Scheme that all NSS National Savings Scheme before 1st April 1992, all the deposited amount or interest accrued on that will be exempt if it is withdrawn after 29th August 2024. Okay, thank you. So this, as much as possible, I have tried to cover in the amendments. So
Thank you, CMA Iyer. It is good. You have done justice to the time, and so that you have skipped those slides which have been discussed, and you have only pointed out those things which were not covered in the other sessions, and it is good. And to you and for AICMA is congratulating you for making such efforts to present your session, and it's an absorbing session. And Sattaji, you have raised your hand. Do you have any point to say as of now?
Yes, yes.
Ah.
Sir, I have one question. Whether indexation benefit is available in case of long-term capital gain